Okay, we're going to look at the types of business ownership. And the main three that we're going to look at are sole proprietorship, general partnership, and corporation. Really, here you just got to know the advantages and disadvantages of each. For example, sole proprietorship is one owner. It means that you can be your own boss. You retain all the profits. Also, you don't have to worry about sharing management, which can be an advantage. It's easy to start because there's no paperwork to actually start the business. Now, if you have a specific specialty, for example, if you were an attorney, you still would have to have a bar license. But in general, to start a business, you can just start running the business without filling out paperwork to formally start the business. Also, the owner is taxed personally within their personal income tax, so there's no double taxation. The disadvantage is there's unlimited liability, which means that the owner of the business will be personally liable if the business does not have enough money or funds if a suit is actually brought. Also, you're limited to financial resources that you have as the business owner, and the business usually will terminate at the death of the owner. Those are some of the disadvantages. With the partnership, it's two or more individuals who actually get together to form a business, but they do not have to do any specific paperwork for a general partnership. Now, I'm talking general partnership here as far as starting the business. Now, if they're a lawyer, they would have to have a bar license, obviously, but as far as starting the business, it's like a sole proprietorship. You just begin running the business with two or more owners. It is a good idea to have an agreement, a partnership agreement, but you do not have to have a partnership agreement to run or begin a partnership. It does give you more financial resources than a sole proprietorship. You do have shared management, which means that can be a plus because you have more than just one manager. There is no double taxation, so the owners are taxed personally like a sole proprietorship. Unfortunately, though, one of the disadvantages is that the owners are personally liable for the negligence of themselves and the other partners, so there's unlimited liability. And profits have to be split, and there is more than one owner, so there can be disagreement among partners, which is something that does not happen with a sole proprietorship. With a corporation, there is the advantage of limited liability because the corporation is an artificial person, which means that the owners, the shareholders of the corporation are only subject to what they invest in the business. There's more financial resources that are available with the corporation. It has perpetual life. It does not end at the death of the owners like a sole proprietorship and a partnership would. It is easy to change ownership because you have shares that are sold, and as far as ownership, which means that it's easy to transfer or sell the business. There is extensive paperwork that has to be filled out in forming the business with a corporation. That does not exist with a general or a sole proprietorship, with a general partnership or sole proprietorship. And there is the disadvantage of double taxation. The income is taxed when the corporation has to pay taxes. Also, if dividends are given out, the owners or shareholders would have to pay taxes on the dividends. So there is double taxation.